I remember the hair going up on the back of my neck a little bit there and thinking, wow, there really is something here. And it seems like no one is doing it. WineFi is a next generation platform for fine wine investing. We make it very transparent and affordable to gain access to fine wine as an asset class. We do that by compiling diversified collections of fine wine that we manage for our clients from sourcing all the way through to sale. Those clients might be private individuals, they might be platforms that are looking to offer collections of fine wine to their own clients, or they might be professional investors looking to gain exposure to fine wine in a structured financial product. And when the time is right to sell, to maximize returns, we sell the assets and distribute the returns pro rata to the asset owners. I went to university in Bristol, did a master's at Cambridge, but I started my career in traditional asset management. So I worked at Fidelity and then at JP Morgan. At the same time, my fiance's family were very deep in the wine trade. So her dad ran a major UK importer. He went on to head up a leading English sparkling wine brand. So I was always aware of wine as a collectible, and then through my investment background became interested in wine as an asset class. I think WineFi first and foremost came from me wanting to solve my own problem. I'd been really put off by the experience of dealing with a couple of market participants when I was looking to build out my own wine portfolio. I felt like I didn't have enough information to make a balanced decision. It felt like there were massive informational asymmetries between what I knew as an individual investor and what I was being told by the various different companies that I approached when I was looking to build out a portfolio. I felt like there was a level of opaqueness and complexity that you wouldn't have if you were dealing with a professional asset manager. And I was really trying to understand what the market opportunity looked like. We wanted to build a business that could scale from the outset, and we wanted to serve a market that wasn't currently being served. So the first thing that we started doing was conducting a bit of market research. So I started speaking not just to my former client base, who are overwhelmingly professional investors, but also to sophisticated and high net worth investors that I knew were already investing in wine in some shape or form. And what was really interesting is both demographics loved the idea of a structured investment product for slightly different reasons. The financial intermediaries that I was talking to loved the idea because they wanted something that they could offer to their end customer, whereas the high net worth, sophisticated investor group wanted to gain exposure to a huge basket of wines at a fraction of the cost of owning the individual assets outright. So even if they had their own wine portfolio, even if they were a wine consumer, they were still interested in a structured investment product because they recognized the benefits of gaining exposure to the asset class. That got me really excited because it suddenly looked as if there was an enormous untapped market here. There is a huge degree of expertise, I would say, needed to invest effectively in wine, in the same way that there is a significant degree of expertise needed to invest in art or classic cars or any esoteric alternative. Obviously there's a huge amount of expertise needed to invest in anything, but those type of alternatives are so niche, they're so specialist, that you need to have a trusted party that you're working with to compile that portfolio. So the basic idea with WineFi is to combine the professionalism of the traditional regulated asset management world with the excitement, the newness of wine as an asset class, and be the go-to player as wine emerges as a mainstream asset class within the collectibles subcategory of alternatives. I think the decision to go all in on this concept really came from a conversation I had at a pub in 2021 with a former client of mine, so someone we would call a financial intermediary, I suppose. He was complaining that there were so few available vehicles to offer his client base, who are all sophisticated, high net worth investors, access to collectibles in general. So not just fine wine, we're talking art, whiskey, classic cars, etc. And I knew that this guy was managing an enormous book of clients. I also knew that he was just one participant in what is an enormous market. And suddenly that made me realize that the scale of the opportunity here was like something that I had never imagined. The demand for alternative assets, especially uncorrelated assets in current market conditions, especially assets that behave as a store of value, is significant. And I think I had underestimated that demand. And it was realizing that this demand existed from that type of investor that really made it a no-brainer for us to go all in, because not just are we able to do things better for individual investors, but we can also serve a large market through a structured investment product via a channel that they are already familiar with, so via a trusted advisor of theirs, for example. So I remember the hair going up on the back of my neck a little bit there and thinking, wow, there really is something here. And it seems like no one is doing it. So it was very clear from speaking to not just former JP Morgan clients, former professional investors that I was familiar with, but also my peers that were perhaps familiar with wine as a consumable, but not as much as an investment, that there is considerable demand out there for fine wine in a structured investment product. At the moment, the wine trade is understandably set up mainly to appeal to consumers, people who perhaps want to buy fine wines but want the optionality of taking them out of bond and drinking them, as opposed to those that are approaching wine chiefly as an investment product. So we recognized that there was an opportunity in the market really to appeal to two new audiences. First off, younger investors who are approaching wine first and foremost as an investment, but also like the idea of learning more about the asset class, who want to be able to build a portfolio over time, perhaps drink some of it, but really treat it as an investment. They are currently really underserved by the market. Just to give you an idea, the average age of a WineFi investor is 36. The average age of traditional wine investor is 58. So there's a radical difference there in terms of age group. But equally important is that there is an entire investment universe out there of people who are predominantly interested in fine wine as an investment rather than a consumable. This represents a huge opportunity, not just for investors to gain exposure to a fascinating asset class, but also more capital coming into the space benefits the entire ecosystem, from wine merchants to producers to third parties like storage facilities. And at the same time, it will also fuel growing interest in new producers. So our hope is that by bringing a new demographic or demographics to the wine trade, we can benefit the entire ecosystem. The wine investing landscape is currently very fractured. There is no go-to solution in the minds of most investors looking to access wine as an asset class. When you think of wine investing, chances are you don't think of a particular company. Whereas if you think of an index fund, to use a very financial example, you almost immediately think of Vanguard. You think of property, you think of Blackstone. You think of art, you think of Masterworks. Our ambition is to become that name for wine, really become synonymous with wine as an asset class. To achieve that ambition, it's not enough that we're able to source great assets at great valuations and also offer a great client experience. We also have to be able to offer solutions at every price point for every type of investor, whether that's a retail investor looking to allocate 200, 500, £1,000 to wine, whether it's someone that wants the optionality of taking the wine out of bond, so needs to own the underlying title themselves, whether that's a professional investor that wants to offer wine as a structured investment product to their clients, or even whether it's a DeFi asset management platform that wants to offer tokenized collections of wine to a new Web3 audience. We have to sit across all of these solutions, and our strategy is to partner with players in each of this space to become their go-to supplier of choice for accessing this asset class. So coming from a traditional asset management background, we were very aware that we wanted to bring experts into the business as soon as possible. We're very lucky to have an advisory investment committee comprised of 2 professional wine investors and 2 masters of wine, of which there's only 421 in existence. So just to give you an idea, more people have been to space than have become a master of wine. We are also lucky to be backed by one of the largest, most ambitious businesses in the wider wine trade, Coterie Holdings. We welcomed their CEO, Michael Saunders, to our board of directors earlier this year. Michael founded Bibendum, is a really blue chip name in the broader wine trade. And partnering with an organization like Coterie offers us access to supply side and brokerage channels off limits to all but the largest wine merchants. In short, it means better assets, better valuations for our clients. It is not enough to make the asset class accessible. We also have to professionalize the whole experience of investing in wine. Wine is, in and of itself, unregulated, and this has often been off-putting for sophisticated and professional investors looking to gain access to the space. Our concept is to apply the CFA's GIPS standards for alternative asset management to fine wine for the very first time, meaning investors have reassurance that the assets are being managed in line with recognized standards that they are familiar with. One thing that we were very aware of as a new player coming into the space was that it had suffered from the presence of some bad actors in the past. As an unregulated asset, it offers the opportunity for somewhat unsavory characters to get involved. So something at the forefront of our minds was, how can we build trust from the outset? We've taken a multifaceted approach. That might be the presence of some well-known names on our investment committee. It might be the backing from a major established holding company for wine business interests. But it's also the approach we have taken to building in public. We made the commitment to build the product in line with our customers' feedback. And it is also in terms of keeping full transparency when it comes to customer reviews. We encourage every client to leave a Trustpilot review as an honest reflection of their experience. And every single one of our early clients has my personal phone number. They know that they can contact me day or night by WhatsApp or text or email, and that they will get a response. That is invaluable for us because it means that we benefit from very short feedback loops. We get to understand what our clients are after at what point. But it's also great from a client's perspective in the sense that it builds up trust, it builds that relationship over time, and we are ultimately in a high trust space. As an investment business, we are trusted to manage our clients' money. That comes with a huge degree of responsibility, and it's something that we have to be able to get right from the get-go. In many ways, we're looking to build the type of business that I wish existed when I was starting my wine investment career. I started by approaching wine first and foremost as an investment before becoming interested in the assets that I was holding and going on to really develop a passion for them. But that's a very different journey to someone who becomes interested in fine wine first and foremost as a consumable before deciding that they want to hold a few cases and sell a few cases, so the cases that they are drinking pay for themselves. We are very aware that this is a passion asset. It's something that is interesting to learn about. You know, you can talk about it at a dinner party in a way you couldn't talk about your S&P 500 tracker fund. So we are running a number of events. We have a huge bank of educational resources that we're about to release. We run a podcast. Basically all of these different ways for our investors to connect to and understand more, not just about the asset class, but the underlying assets as well. It's very important to us that whilst we are approaching this through an investor's lens, we don't lose the romance of fine wine, because ultimately that romance is why someone will buy the assets from you at a higher price than you bought them for yourself.